All right, team. Um, just doing an analysis, weekly outlook in terms of what I expect from the dollar index and euro and pound USD. Still have not made the breakdown from last week. It's been a busy weekend, but I'll try to get to it. So first things first is from a monthly perspective. What I'm seeing is, I'm expecting price to draw to this overall imbalance here. I'm IDing this old fair value gap, right? So old fair value gaps, especially on higher time frames, you'll see those levels. And you could be a little more precise and mark the low and the high of the fair value gap, but you'll notice that those levels will serve as support and resistance, right, in price, right? Kind of like this area here, and then price pushes through, and order block is formed over this area, right, which is another added confluence. But ultimately, if we take our data set, right, price is continuously sweeping previous month's highs, right, previous month's high, so on and so forth. So in terms of last month's lows here. All right, so prices, I'm expecting the ultimate draw on liquidity to be at previous month's high, right? Now, if we come down to a weekly time frame, you can see this true order block forms right over, where this old fair value gap is, right? Remember, these areas serve as support and resistance. So what I'm seeing is this order block here, and then this fair value gap. So this is a very fresh level that I think if price does trade down to this level, we can see some reactions. But remember, this is a weekly time frame. So I don't necessarily expect that to happen so soon. Then what we do see is price pushing up and then coming down and completely closing in this fair value gap, right? So this low here swept liquidity here, so this would be a range. So you have a low, lower low, higher low, and then price pushes through, right there. Right, so we see price comes down to that OTE level, and I do expect us to see the bullish expansions from this point on. Right, push here. Okay, so remember, once that fair value gap is closed in completely, as it is here, right, and we dig through it, what we should expect is a failure swing. So once we come down to a daily chart, what you see is here's a more precise view of this. Here's that sweep, here's the breaker and the sweep. Here's the fair value gap here, closing in completely, and then we anticipate the failure swing, and then at this level here, right, this proves or solidifies the failure swing, right? Price has broken that particular high. All right, so now we push down to a 4-hour. Now, the current dealing range would be from this low to this high. Remember, the dealing range is defined by a sell side and a buy side liquidity sweep. So here's your buy side sweep, here's your sell side sweep. Going back to day one of mentorship, we understand that this is a bullish dealing range. We had a sell side sweep and a buy side sweep. So what I would expect is for price to push down into, and this level here is the mean threshold of this overall fair value gap. What I'm expecting, or what I'd like to see, is since this is the ultimate draw on liquidity. Well, actually, let me come back to a daily. So yeah, so this is what I believe is the ultimate draw right here. And if we come back down to the 4-hour again, here's the fair value gap. This is 50% of the fair value gap. What I would expect is for price to, come and build a discount in this range, sweep, and then I look for some type of signs of, the ultimate reversal, right? So this area in here, all of this right now is just a point of interest, right? This whole entire area. So what we'd be looking for in this area is just a fractal of, the certain things that we see here with the failure swing, imbalance created, or some type of breaker entry with an imbalance created. some type of fair value gaps created on the 15-minute that price reacts to, and maybe we see a 5-minute true OB form. But anyways, inside of this area, just understand that this is a point of interest for price, right? Because we are expecting price to draw on this level up here, right? So be advised that time is important. So if this is the ultimate draw, if this is my premises, then I should expect, or the foundation of my premises should be, I should think in terms of the power of three, right? Accumulation, manipulation, and distribution. So if we push up here, right, you see that's a high and that's a high there. So here's some equal highs inside of this area. Then back through, right? So price should push through that. All right, so equal highs here, pushing down to an hourly chart. An hourly, right? We can see this is, this area here would be considered a breaker, and there's a fair value gap on both sides of this candle, right? So this would be a breaker. The price ran right through, so we could, potentially see some sensitivity around this level. Right now, already we have kind of this short-term low here, right? Sell side liquidity provided. This low was created New York session on Friday. Give you guys a clearer look at these equal highs, right? Boom and boom. $15-minute. Right, same idea, that changes. So like I said, I won't just take entries as soon as price comes in here, which of course this will be the inverse, because we'd be looking at the euro and the pound USD. But just to give you guys a foundation on what I'm expecting long term from price and how we apply that narrative to our intraday decision making, right? I would expect price to push in here, and then I would look for once again those one of our entry models to go long to draw on this level here, and then from a long-term perspective, I'm expecting price to reach this level. But what I think is the key here is that this completely closed in an imbalance. We created this high, price failed, right? This is just a 62 or OTE retracement here, and then NFP sends us running up higher because these are the true intentions of price. News is only used to help push price fairly quickly in its original direction. So that's my expectations on DXY. You should be able to take that and transfer it over to the majors. So if we look at the euro, right? Our mistake last week, well, not necessarily a mistake, but just a journaling point to kind of reference as we push into this week. I was a little too caught on in my bias that price would need to push up to this area, when actually Monday, as I stated in the chat, Monday was our accumulation day, which was here. Tuesday pushed up, swept liquidity, and engaged with this fair value gap, right? Equal highs here, and it ran down. Wednesday was somewhat of a continuation, a retracement and a continuation. Thursday was the retracement before NFP into a 4-hour fair value gap in this area, and then price pushed down, right? So inversely, the inverse of DXY, I'm expecting that this fair value gap here is our draw on liquidity for the week. Now we are in a bearish market, right? So the elephant in the room, right, is wanting to send price lower, right? So we'll trade alongside that particular premises. And you can see how this low resistant liquidity run is built up here. It seems like we have a little opening gap in price. but you never know because the feeds. This is FXCM feed, so I don't know if it's the same from broker to broker. But anyways, here's a gap here. Price could potentially, push up into that gap and then send price lower. Let's see, 4 hour. And honestly, after this structural break here, this is what I believe is the key turning point or market structural shift. It's this low sent price higher. But then, on the flip side of that, this low didn't necessarily take any liquidity. This would be the, here's a short-term low, intermediate term low, short-term low, right? So I would, to kind of completely bearish, I would like to see this low run, which I think, we get that this week with this low resistance liquidity built all up in here. And then price has balanced this fair value gap. This was Thursday's retracement was only to come to this fair value gap, right? And then set up for lower prices on the euro. So I'm thinking that this low here is the bigger draw on liquidity, right? Because we've had this consolidation and prices swept weekly levels in here. Let's look at a monthly chart. Okay. All right. So that's the August candle. The July. Okay. Why is it not showing? All right. That's another topic. But all right. So the weekly is showing an opening gap also. But anyways, you guys get the where I'm going with this. And especially if we break this low, then this would be a failure swing. So this price leg here, right? Right now we've taken buy side liquidity. So to solidify this as a bearish dealing range, right? We need to see price snatch this low, and then that would be 2 external liquidity sweeps. So we have this sell side liquidity pool here. This London high, right here, buy side, right, buy side sweep, and of course if we take this, that would make this a bearish dealing range, and then we look internally for some type of reversals, and we've already built buy side liquidity here as well. But the biggest thing to understand about this week is that we're expecting price to that this would be the ultimate draw on liquidity, right? Because if we look above, price has already kind of fulfilled this objective, right? We are in a bearish market. All we did here was build up liquidity. Remember that price, right? If we're going to expand lower, right, and we're expanding from a higher time frame perspective, we need to come and collect a decent amount of gas, right? So what price did first was engineer that gas or that liquidity here, right? Early sellers here, knocked out of the market here, and then what I think that we will see this next expansion lower. Hourly chart. Similar to DXY, but hang on, this is where we start looking for S&T divergences, right? Basically an anomaly between DXY and the euro. So if you're new, then understand that the DXY and the euro are highly correlated pairs. So we would expect to see the same price movements across the board on those pairs. Whenever we see one fail to take a particular high or a particular low, where the other one does, then that is what we consider the anomaly. and wherever the sweep is, we expect price to want to be pushed in the opposite direction. Right, so I'm pretty sure we'll see some examples of that this week. I'm just looking at these levels here. Nothing to see right there. And ultimately, so I'm marking this one, nothing to see there. This one, and this one, right? All right, so check this out. So DXY took this high, which means that the euro should take this low, right? We have not gotten that. So, this here would be S&T divergence. The only thing about it is that time, right? This is a Sunday going into a Monday. And then the premises behind price is that we want to push price lower. So to optimize the S&T divergence, right, you kind of want to see it in the direction of where the higher time frame is telling you that price wants to push to. So I wouldn't necessarily focus too heavily on this one. If this were the inverse, if this were flipped and then we're already expecting price to push lower, then it would make sense to have some type of smart money accumulation on the buy side to send us lower, to reprice lower the sell side. But with this buy side sweep, remember that price moves from buy side liquidity to sell side liquidity, right? So we should see this low run and then ultimately this low and then pushing into this fair value gap. But we'll see how the week plays out, pushing to pound USD. No difference here. This is just a market maker sell model, right? Where you have your accumulation, low risk buy, and then up here, smart money reversal off of the failed swing. Failed price swing, price pushes into this fair value gap. Same here, pushes into this fair value gap. You have the sweep, right? Sweep, fair value gap, sweep, fair value gap. Price pushes lower and ultimately sweeps all of this. We push down, lower sell, and then here is a failure swing here. But what I don't like is that I don't necessarily see a liquidity sweep. But I'd expect for price to push inside this leg and possibly show signs of a reversal. What would be more ideal is for us to get something here and then a sweep, right, filling that fair value gap. This would be short-term high, intermediate term once we fill the fair value gap, and then you'd anticipate a failure swing, which would be the next short-term high, right? So at that point, our premises behind price is set. I am expecting for the dollar index to seek the fair value gap on the buy side. And if we look here on pound USD, price is consistently sweeping previous day's low, right? So if it's not broke, why would we fix it? Here is previous day's low, so I would expect price to seek previous day's low. Now with that in mind, we then move to our thinking process to accumulation, manipulation, distribution, right? So I'm targeting previous day's low tomorrow for pound USD and euro, and then DXY. We're targeting previous day's high and also the buy side fair value gap. And then here is your bigger narrative that is built behind price, right? I mean, very obvious, right? We should know what price wants to do at this point, and then you can just see the curve forming here, right? So this is sweep. Price pushes back into the range, right? Here's your buy side sweep, sell side sweep. Bearish dealing range, pushes back into turn range liquidity, failure swing, and price pushes lower on NFP, right? So we'll look inside of here to see what we get. Just be very cautious in here because I don't see yes, we have a failure swing, but I like to see a liquidity sweep before this is created, right? I would have much rather saw this sweep something as opposed to just dropping off. Had this high swept, and I would be a little more in tune with shorting from this area, but we'll see how it plays out. And I will be looking at the CAD this week. So CAD has the same, pretty much the same outline as DXY, right? Fair value gap in here, equal highs here. You know, this red line here is an old fair value gap. So I want to see if price will give me some type of sensitivity from here. But here's our OTE. Here's a sweep, right? Here's a sell side sweep, buy side sweep, right? So what that creates is a bullish dealing range. So I look for price to push in here, and then we'll look for signs of a reversal, right? Here's the consolidation, expansion, reversal. So what I expect now is the retracement phase and then the reversal phase, right? To take out these equal highs, right? And I really like what we're getting here because we have some type of cause for price to push to. S&P. There's a lot of shorting done on S&P. Another mistake made on S&P last week, similar to the euro, was shorting. Well, not necessarily shorting, but not taking into account that price had taken previous week's high. So I think this move was made on Thursday, right? So this previous week's high was taken on Thursday, and then I shorted. I'll actually show you guys, the entry and why I entered. But I should have been thinking more in terms of holding as opposed to, just canceling out the position. So we had that sweep, here, and then with that sweep, and I'll show you guys an example of, what we look for when we're looking for the divergence. So I want to say it was not US 30, but the NASDAQ 100, or maybe not. Maybe it was US 30. It's previous day. All right, let's try US 30. Okay, cool. All right, so right here, right? Ultimately, we're sweeping an old weekly high, but then once we zoom into price, right, we're seeing S&P take out a previous day's high, right, where US 30 does not, right? So this area here, right, would be the sweep or the anomaly or the false move rather, right? Once we see that, we look for reason to enter short. Push to cancel this, and you can literally build a trading model around daily or weekly or even session liquidity sweeps. So here it is. Here once you get that sweep, right? So you literally have that sweep, and then you see this structural shift here. So once here's a series of up close candles, then imbalance is created. Once price clears this low, then all we're doing is trading this fair value gap. This is literally, at this point, probably every entry from now on. So I know I teach that, starting out, most of your entries, you'll perceive the breaker entries first, but as you progress, you should understand, order flow and seeing order flow established. But this is, this had the potential to be a monster trade. I just did a poor analysis, and then of course we had equal lows here that were attacked. So this is a 2 minute, and then this move here comes from. So you had like I want to say 15 minute, yeah. 5 minute, we can even push to a 10 minute. All right, so here's an order block that actually swept liquidity here, and then here's a fair value gap, right? And you can see price push down, sweeps this liquidity, and then here's the fair value gap here, and then let's see if we can find the same entry model, right? So remember, I want you guys to pay attention, right? Once we get a fair value gap closed completely, what we expect is a fairy swing, right? This is real market structure analysis, right? Here's that fill and then failure swing, and then all the price does is pushes to this buy side liquidity pool, but ultimately fair value gap. And I'm just looking inside of this failure swing to see if there was any imbalances or anything to possibly take a counter trend trade from. Not so much, right? I would much rather see a huge imbalance, but I don't necessarily see it there. So I would not have engaged, which I did not engage with the buys on this. But this is something fun right here that I'll show you guys. But what you should understand is here's a sweep. So I shorted this multiple times. So the first short, I just ran price right into the fair value gap here. I didn't consider buying, but I did know that they would have some reaction from that higher time frame fair value gap. But I was not alert to the idea that we ran a previous week. So had I been, then I would have known that we were gonna seek these equal lows and ultimately be in balance. And then here's order flow established again right here. So here are the other shorts that I took, right? And then look what price pushes to, the imbalance. The high of that imbalance just serves as resistance. You have equal highs created here and then sweep, right? And here it is again. This is order flow being established once more. Series of up close candles, right? Inside of the range of those candles, what do we see? Imbalance, right? So they push here, they sweep these equal highs, and then we have another sweep once more, right? But what's fun about this area is, let's push to a daily chart, right? Maybe a 4-hour chart. I'm just trying to find the area of where I'm kind of showing you guys the old areas of imbalance. Switch to an hour. So remember, this is at 4-hour. Here, I'll place it in red. And for more recent price, you can use an hourly chart. Basically, what I'm just showing you guys how these levels, you'll see certain things form around these levels. Right. So here's that hourly balance. But I do believe it was something different because the imbalance that I saw was basically the old fair value gap. The 50% mark was perfectly aligned with the old fair value gap. And maybe it's on a 5-minute chart. Perfect bingo. Not quite. There. And here. Okay. So not the most precise, but here's an old hourly fair value gap. Here's an old weekly fair value gap. You see order flow established over that old fair value gap. You can see price, how price bounces from that area. So it's just something for you guys to pay attention to. And maybe you build your own theory or you find some type of consistencies in price as it relates to what I'm showing you here. But ultimately, you should understand right here is order flow. It's kind of like a money transfer, right? Here, order flow established, and then we transfer here, order flow established, and then there's a sweep. But ultimately, you could have entered here to go short, and then price just kept running, right? So that's that. I'm still gonna try and make the breakdown from last week's price action, but for now, at least you guys kind of have an example of a top-down analysis, or at least how I do my top-down analysis, and it's just simply based off of where will that weekly candle, right? That weekly candle, where is that weekly candle most likely to draw to the downside or to the upside, right? As ICT says, we don't have to be super precise in terms of where it will close, right? We just want to know where is price more likely to expand to, right? That's our weekly range. And then our weekly range helps to build our daily bias, because we should understand that now price is sleeping previous day's lows. Here's the previous day's low, so I expect nothing but downside movement here, right? And we could also say short-term high. Here's more of an intermediate term high, and then Thursday and Friday built another short-term high, right? So yeah, that's that. Any questions, feel free to ask away. I will see you guys on tomorrow.